Hello, this is Simon Klein from TradeSmart at 8 a.m. Eastern Time on the 17th of September 2017. Welcome to this week's episode of Where is the Dollar Going Next? And what you see before you is a dollar index on the daily chart wound back to the end of the previous week. We said last week that as the dollar was sitting in monthly demand, we could move to the upside. But we also said, based on the weekly chart, as we were in a weekly downtrend, that we're most likely to continue moving to the downside. So let's take a look how the market played out last week. So on Monday, the market gapped up, which was a bullish gap, and moved to the upside. On Tuesday, the market closed with a small bar like this, deciding whether we're going to continue moving to the downside in line with the weekly downtrend, or whether we're going to bounce more to the upside. So on Wednesday, the market initially moved to the downside and then continued moving to the upside close to this overhead supply. And on Thursday, the market hit the supply zone and moved to the downside in line with the weekly downtrend. And on Friday, the market continued moving to the downside and closed over here for the week. So the question is this: where is the market likely to go this week? Well, it's very similar to last week. If we go below and close below this area over here, then we're likely to continue moving to the weekly demand zone below. And if we hold this level over here, then we may move to the upside. If we happen to break above this area and close above this area, when we're likely to continue moving to the upside in line with the monthly demand zone. Someone posed a very good question a couple of weeks ago, and I'd like to address that now. How do you deal with conflicting timeframes? So if you listen to what I just said about how the market played out last week, there's a clue as to how to trade conflicting timeframes. So the short answer is this: if the market, for example, on this day is moving to the upside, then you can say that the monthly chart is controlling price. So it's most likely to continue moving to the upside until we hit supply, which we did over here. Once we start moving to the downside, we've got two time frames in play. We've got this supply zone here on the daily chart, plus we have a weekly downtrend supporting price movement to the downside. So that's basically how you reconcile different time frames. You have to know which time frame is in play at which location and time on the chart. So let's take a look now at the larger time frames. So if we look at the weekly chart, we can see that last week we did move to the upside, and then we closed up for the week but down from the high. So it's a pretty bearish bar. And most likely, based on this time frame, we're going to likely to continue moving to the demand zone below, as we said last week. And again, if we look at the monthly chart here, we're still in monthly demand that was once supply, so we may very well move to the upside from here, but still the odds are for a continuation of the move to the downside eventually, and potentially back down to this area over here. What I'd also like to do now is point your attention to a webinar I'm taking part in this week. It's a timing research show. What I'll do is leave a link below this video, either on my website or below the YouTube video on the YouTube channel. And let me show you what the sign up page looks like. So you'll come to this page if you click on the link, and this is taking place on tomorrow, on Monday the 18th of September at 1 p.m. Eastern Time. So sign up for this and you'll hear myself, among other professional traders, discuss the future movements of the S&P 500. If you like this video, hit the like button below, share it with your friends, and be sure to subscribe at the end. This is Simon Klein from TradeSmart, wishing you the best of luck with your trading this week.